Stock markets in Europe are suffering this morning, with the UK's FTSE 100 index currently down about 50 points, while the Euro Stoxx 50 index is lower by 32 points. US stock futures are also trading lower, with the Dow Jones Industrial Average front months future contract off around about 110 points, while the S&P 500 index futures are currently off around about 13 points. Now, gold is in favor. It's currently up around about $3. In the currency space, the dollar is beating its rivals. The euro is taking a beating. I should go back to stocks for a second. The Italian national index, the FTSE MIB in Milan, is down over 2%. In the bond market, Italian 10-year bond yields are currently up around about 4.7%, and that's a sharp rise from 4.24% that we see the level that we saw on Friday, up around about 23 basis points, give or take. That's also put an effect on the Spanish and the Portuguese bond yields, which are also tracking higher as well, on the back of the political drama that we're currently seeing in Italy. And in other asset classes, such as the core government bonds, your UK gilts and your German bonds, they are in favour as investors are seeking some safety at the moment. Good morning, I'm Ishaq Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So we are lower across the board, sharply lower. And that's the two driving forces behind that is, of course, one, the political uncertainty that we are seeing in Italy. This is after Silvio Berlusconi, he forced 5 of his ministers to resign from the grand coalition that's currently in place, or was in place in Italy, throwing the political system into turmoil. That essentially means that the PM, Enrico Letta, he is going to have to now seek a vote of confidence on Wednesday, and is going to attempt to form a fresh grand coalition in order to avert a collapse of the government. If they can't do that, then the government will be dissolved and we may see fresh elections in Italy. Now, that is a very worrying scenario for investors because, judging by how the Italian elections went earlier this year, Italy, in terms of how the people out there, they're very polarized, and that's the same case with the politics. There's many parties, none of who have a stronghold or a great influence, which is why we have this grand coalition in place. The elections in April were inconclusive. It took a few months for Italy to come out of political paralysis, and I think the market is worried that we may see that repeat. So that's currently having a big effect on not only the Italian stock market, but also on Italian bond yields. And the big fear now, heading into this vote of confidence, is what credit ratings have to say. There has been a lot of talk that we may get an Italian sovereign downgrade from the likes of Moody's and S&P, and also Fitch ratings. Now, there's also another political situation playing out, and of course we know this being the fiscal situation in the US. A government shutdown could possibly happen tonight at midnight if Democrats and Republicans are unable to work together to form some sort of deal in order to avert a full collapse of the government, or shutdown of the government, not a collapse. Now, the US Treasury is going to run out of money in about 3 weeks or so. It's going to cost the US economy about $8 billion per week if they cannot seem to resolve this particular issue. They need to formulate a new fresh budget in order to raise the debt ceiling. That is the next big thing. But given the fact that in the US, the congressmen are deeply polarized. They're on opposite ends, particularly when it comes to Obamacare, which is President Obama's health care plan, where we have the Republicans, it's very deeply unpopular with those guys. And when it comes to the Democrats, they are currently in a position where they want to continue with Obamacare, but the problem is that they're finding it very difficult to convince the Republicans that this is a measure that should be implemented, whereas the Republicans are more worried about spending cuts on the whole. So at the moment, it seems like there is a slim chance that we may get a partial government shutdown later on this evening. If that isn't resolved in the next few days, then there's a possible, the implications are for something to be a lot more worrying going forward, with the potential that this could actually hit US economic growth. Moody's suggested, the ratings agency suggested that this could shave off US economic growth to about 1.4% by the end of the year. On an annualized basis, currently the US economy is running around about 2.5%. Now, at a time when the economic growth is extremely fragile, the last thing investors want to hear about is a setback in US economic growth. On a slight caveat, you have to remember that this also means that Federal Reserve Chairman Ben Bernanke will not taper. If we do see a hit on economic growth, he has more reason to hold back from tapering activity, which means that we may not see tapering in 2014 or 2013 altogether, and we may have to wait till 2014 before we start seeing some sort of tapering take effect. And that's going to be very positive, or at least liquidity junkie investors who love the easy Fed money that has been supplied into the market. They're going to take that as a positive. So we may start seeing price action buff up a little bit. Now, on the immediate picture, we've also got a number of other things in play. One, Chinese PMI numbers. They were okay, but they weren't great. There was a bit of a dip down. It wasn't as strong as the initial estimate, so investors have taken that as a bit of a negative. On top of that, the Japanese industrial production data and the retail sales data slipped, also causing a bit of concern in the market about where the economy is going in Japan and how effective Abenomics is. That's Shinzo Abe, his the Japanese PM's or president's plan, and at the same time, it's the end of the month, so we're seeing a bit of a month-end profit-taking. Investors getting out their positions. They don't want to get burnt before the new month of October starts, which is going to be an extremely risky month, given the fact that we do have this showdown in Congress, and also Federal Reserve tapering. Still the narrative, it's not going to go, although it's receding somewhat, the expectations that we are going to get tapering is dying down slowly. Investors are coming to the realization that maybe we may not get tapering this year at all. This week is going to be a very busy week. We have a number of economic data points. Today we have the Chicago PMIs, we have retail sales data coming out from the Eurozone and the UK, and on Friday, of course, it is payrolls day, the big number from the US economy. If we do see a government shutdown, however, we may not get payrolls. It's something that investors now have to consider. Anyway, that is all for your daily market bite. Tune in for another one tomorrow. Thank you for watching.